In this video, I'm going to go over how to identify strong daily levels. Now, levels are the absolute foundation to my strategy, and you'll never see me take a trade that isn't at a level. The reason I do this is I'm trying to find some strategic edge over the market without actually having to put the effort in and find one. Now, what I mean by this is I'm trying to think in probabilities. So for example, when people tell you to buy in an uptrend and sell in a downtrend, that's because statistically, what are the chances of your buy working out in an uptrend compared to a sell? It's a lot harder to be profitable with a sell position when the markets are just constantly going up. So all you have to do is follow a little checklist and it automatically increases your win rates by 20, 30, 40%. And that checklist for me is a strong daily level. So let's get right into it. So we're going to start off with what actually is a level. Now, levels are everywhere. They're on the 15-minute time frame, the daily time frame, the weekly, the yearly time frame. When we see a change in direction in price, as you can see from a nice little uptrend here, and it goes to a downtrend, it doesn't just happen randomly. There's a reason it bounced from that particular area. It could have been a daily level from 10 years ago or a 15-minute level from, last week. The market just bounces between levels, such as this zone here and also this zone here. Think of a level as a trampoline. Most of the time it'll bounce. So every time it touches a level, it'll bounce off of the level. But there's also a chance that eventually it can break through. And generally, the more a level is used, the higher the chance it has of breaking. However, a level doesn't always become weaker over time. It can get stronger. But for example here, if we had this level, and as you can see, it's bouncing, but there's a pattern going on here. It's failing to produce higher highs each time, which means this level is providing lower and lower volume, meaning there's less buyers in the market. Or there's just more sellers in the market. So over time, if this is failing to provide a bigger pullback, then eventually there's a higher chance it's going to break. However, a level can also become stronger. For example, if we have a nice bounce here, creates a higher high, higher high, higher high, higher high. However, each time it's tapped, it's provided a larger and larger pullback, which to me means that this level is actually getting stronger. Now, usually once a level's been tapped 3 times, that's when the probabilities of it working again becomes lower and lower. So this 4th tap here had a lesser chance of providing a pullback compared to this one, if, of course, these highs were equal. But the fact that it's provided a larger pullback, to me, means that it's got a pretty decent chance of providing an even bigger pullback. So what constitutes a strong level compared to a weak level? Now I have 2 ways of splitting these up: market structure and size. We'll go over size first. So in the Forex markets, size does matter. I'm looking for a move of 100 pips in and 100 pips out minimum. So for example, this level here, we see this move in, this move out. How many pips is that? It is 400 in and a nice 290 out. So for me, that would be a valid level. However, if you wanted to look at something smaller like this, as you can see, it's only had 105 in, and of course it's had a decent amount out. So only 105 in though. So that is way weaker compared to this. But of course you need to be careful because some pairs, for example, GJ, they move a lot faster compared to, let's say, a Swiss pair or Euro GBP. So even though like this little move here looks tiny on like GJ or gold or something, it could be like 200 pips compared to, I don't know, a Swiss pair. It could literally be 10 pips. So make sure you're measuring them, or you check the volatility of each pair and you understand how that market moves before actually marking out your levels. And the second condition is market structure. This sort of relates to a little term that we made in the Discord called maturity. So how how a wine matures, a level can also mature. So once a level is created, you've got to give it time. You've got to give it at least movement. So it's got to do at least 100 pips, give it at least a week, and then wait for the retracement into the level. So for example, this level, see how we can clearly see the structure here. We're having nice move up, nice move down, and there's structure within this structure, like little highs, little lows, compared to, let's say, for example, this level. That is a farty level compared to this massive thing up here. Why? Because there's no obvious structure to it. As you can see, we created a high here, it then pushed down a little bit, little pullback, and then continued down. There was no time compared to even this level. As you can see, this actually took a week to push into this level and about 2 weeks out, and it created decent structure, a clear low, a clear high, and a clear low down here. And hopefully just in that picture, you can see what I mean. You can see how we had a big move into the level, but then 2 little farty moves out, whereas this was 2 gigantic moves. I mean, it's just obvious, isn't it? If you could pick, let's say, this level, this level, this level, this level, which levels would you feel most confident in? If you could rank them 1 to 4, it's a bit obvious which one you'd pick. It's obvious you picked this one because this has obviously had the strongest move in and the strongest move out. So there is still a lot of volume held up within this level. And going back to thinking in statistics and probabilities, that's all we're doing. Statistically, which one of these levels has the highest chance of providing us with a decent pullback? So let's take this one for an example. Where would you mark out your levels? Well, you just look for your highs and your lows. Where's the clear market structure? As you can see, super clean moves all throughout this move down. So I'll draw the levels like this. That one, that one, that one, that one, and that one. We're not looking for any broken levels. We're looking for all unmitigated levels, levels that haven't been tapped into yet. So for example, this would be a really nice level, but as you can see, it's been broken multiple times. Yes, it could work, but again, talking in statistics, these ones have a much higher chance of providing a pullback. And here's one more example of this move here. Which levels would you actually mark out? So you'd go for the strong ones. I don't want to see anyone taking like these little levels, these degen levels here, when you've got an obvious one here, and this one is also pretty decent. These, literally one candle, little consolidation phase, whereas this one made a nice, decent, juicy wick, and you also got the swing high up here. Here's another example. This is current price. Which levels would you be looking at here for sells? Of course, you got the swing. You got this absolute mess here, which hasn't really provided any levels, but you do also have this here. Again, it's a bit of a mess, and I'd only look at this level if price actually continued down and then saw a retest into this level. It's barely even broke out this range, and if price immediately came back up to this level right now, I definitely wouldn't take it. So there's one more important thing that links to entries when it comes to levels, and that's how to draw our POIs, our point of interests. So how would you actually take a trade? Let's say we had this level here. How would you take that trade? You wouldn't just, wait for it to come up and just take sell. You need to know where you're actually going to sell from. So I'm only looking from the candle close to the top of the wick. So that is my area of interest. Take another example. This is my area of interest right there, that little level. And then what I'd do is I'd go down to the 4-hour time frame, and I'd also check the 1-hour time frame just to make sure that's where the level actually is, because sometimes there can be, a massive wick, and let's say the wick was from all the way down here all the way up there, then our area of interest has just changed, and now it's going to be that. So for example, take this level. Yes, you have the main level up here, another level here, but you'll also have a little sub level just there. And there's a high chance, obviously, price could come up, tap into this lower level right here, and then work. So what I'd usually do is I'd just draw a little line here, a little very, very faint line, so it's not, blurting in my face. And if price does come up to this level and bounce off this and we see a rejection, then of course I'm not going to enter a sell from here anymore. I'm waiting for a clear break straight into this level and then a rejection, because the cleaner the move into the level, the cleaner the move out. Let's say again, this is our zone and this is price action all the way into our level. That is not nice at all, because there's a high chance it's either going to break or do the exact same thing. It might have a rejection, but it might look like this. We want clear movement straight into the level like that. Beautiful move out. And that is pretty much everything to do with levels. Yes, it's pretty simple and self-explanatory, but it works. Simple works. We don't have to go super advanced into the 15-minute, the 1-minute time frame, find some crazy order blocks or imbalances or Elliott wave stuff. It's just levels. Yes, they can be refined. You can do your data collection and refine them even more and more and more. Some levels might be respected more than others, different types of levels, different pairs, during different days, different news releases. But that's the type of stuff you guys have to do yourself. Of course, I'll show you, I'll guide you how to collect data and how to refine that data and how to use that data to improve your strategy. But that is for one of the future videos. We've still got a few more basics to cover, but then we'll go into more of the advanced things later on. So if you enjoyed the video and you made it all the way through to the end, please leave a like, leave a comment, and join the Discord. The link is in the bio. That is where I host the weekly live streams, the breakdowns, the analysis, the backtesting sessions. You guys can ask me questions. There's loads of people in there that trade my strategy, trade other strategies, crypto people, stocks people, Forex, you name it. I'll see you guys in the next video.